You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 16th day of September, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. Once you do that, use the login method I just explained. Going forward, you'll get an email right before the show starts, and in that email is a link, and just clicking that link joins you with the show. One click. Now, on days you're out of the office, away from your desktop, you can still join. You just won't have access to the chat box, okay? The chat box is there so that you can ask questions, participate in the discussion. However, If you're away from your desk, you don't have access to the go-to software, just point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. Again, you just don't have the chat box. We also stream live during this show on Facebook, YouTube, and Twitter. The other 22 hours, or basically 24/7, with the exception of this 2-hour daily broadcast, since April 2005, we have been streaming the gospel to the four corners of the universe 24/7. So anytime you need a word of encouragement, you need a lift, you just need some time, go to CFRN Radio. You can dial in right from our homepage. You'll see the little radio tower. Listen to CFRN Live. You click that anytime, 24/7. You'll find some of the best hand-curated preaching and teaching and things of God that I can find for you. Okay? Excellent. Let us open with a word of prayer. Seems fitting. Heavenly Father, we come to you this hour asking for your blessing. We ask that you help us as we are gathered together. God, we pray for guidance in all the matters at hand and ask that you would clearly show us how to conduct our work with a spirit of joy, dedication, and even enthusiasm. Give us the desire to find ways to excel in our work. Help us to work together and encourage each other to excellence. Help us to become masters of excellence. We ask also, God, that we would challenge each other to reach higher and further, to be the very best that we can be, to be the sons and daughters that you created and called us to be. We ask this all in the name of Jesus. Amen. Okay. Happy Wednesday. Hump day. Already again. Based on your time zone, of course. If you're on the West Coast, you still got a few more hours to go. But if you're East Coast, you're already over the hump. All right. Let's take a look at the numbers from around the world. These are the cash markets, or the indices as they're called. Starting in the U.S., the Dow is currently up 213 points. NASDAQ is basically flat. S&P 500 is up 14. Russell 2000 up 21. And that's our one mover and shaker there, the Russell, up about 1.5%. Now, we do have the Fed announcement this afternoon. While we don't anticipate any changes in interest rate policy, the whole world will be tuned in for the prepared statement and the Q&A session to figure out not so much what the Fed's going to do today, because we don't think the Fed will do anything today, but the language that accompanies the statement to give us an idea of what lies up ahead. So many uncertainties in the world today. Probably more uncertainties than this nation has ever faced at any one time. Now, crude oil is up $1.58, trading $39.86 last, gain of 4%. Gold up $9.20, trading at $19.7540 last. Silver up 7 cents, trading $27.54 last. Now in the Asian markets, at the close, Nikkei posted a modest gain of 20 points. Shanghai dropped a modest 11 points. The Hang Seng ended the session down just 7 points. It's 2 days of some pretty quiet trade. And in European markets at the close, FTSE down 27, DAX up 37, and the CAC up 6. So again, pretty quiet trading here ahead of this Fed announcement. We do have a mixed day in Asia, thanks to the Nikkei with a little green. Not much, but a little. European markets are mixed, with the FTSE being slightly negative. And it's basically a mixed day here in the US of A. The NASDAQ roughly unchanged, down about 0.01%. So there you have it. Those are the numbers. Again, 2 p.m. Eastern, Fed announcement. After the announcement, there'll be a prepared statement. And then if things follow suit as they have here in the past, since Jerome took over, there will be a Q&A session. And it is during that Q&A session that the markets can really get volatile, more so than the interest rate announcement itself, which comes at 2. Because again, we don't expect the Fed to change the interest rate. What everybody's interested in is how he answers those questions and what's in his prepared statement. That's where the real volatility may come out. And as you know, we don't trade news. We don't teach trading news. Some people trade news. They do it. That's their thing. It's what they do. Our philosophy is we get flat ahead of news or any major economic reports. And the interest rate announcement, the FOMC, is considered to be the granddaddy of the economic reports. But with all high impact economic reports, our philosophy is to be flat. We don't trade the news. We don't trade the reaction, the immediate knee-jerk reaction to the news. What we trade is the follow-through of the reaction to the news. Now with that, we can go to Michael and get a recap of everything that happened this morning in the live training room. Michael, if you're ready, and I see that you are.
Yes, I am.
Okay.
All right.
Yes, go right
Here we go.
No, go right ahead. Did you something you want to say?
No, I mean, you covered it all with the FOMC.
Oh, okay.
You know, it's
All right,
best
yeah.
to just not trade. And like the guys that I have appointments with today, you know, I probably won't trade at all. We can look at the markets and go over what's going on. And, you know, and if you need help setting up, if that's why you have an appointment with me, then we'll get all that done too. But, I'm probably not going to trade anymore today.
All right. Well, I'll turn it over to you now, and I'll be here when you're done.
All right, here we go. All right, good afternoon, everyone. Today is Wednesday, the 16th day of September, 2020. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 13 ticks in gold, and 13 ticks in the euro, 5 ticks in gold, 13 ticks on the ES, and we actually lost 100 ticks on not the ES, this is crude oil. And we actually lost 100 ticks on the ES. I mean, 100 ticks, 108 ticks on the ES, $100 worth. That put us at plus 167.25 on the morning session. Today, it took 25 minutes and 3 trades to get to the goal for the day. At that point, we're up 121.50, and we took a total of 11 trades today. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9. So we only had a couple of break-even trades. But on the month now, we're up $7,222. That's over 11 trading days, averaging $656. Now that is one contract, 2 hours a day. And as you'll see, I missed most of the trades. We are now at our 147th consecutive trading day since my last red day. These are unprecedented times, I'm telling you guys. I've never done that before. Gone 147 consecutive days without having a red day. Consecutive green days. And Anyway, on the year now, we're at $70,681. That's over 172 days, averaging $410 per contract per 2-hour trading day. Now, if you want to become part of the CFRN family, go to EminiFuturesTrading.com. EminiFuturesTrading.com and just follow the instructions there. Okay. Now, gold, we only took a couple of trades. I pointed out a bunch more, but yeah, it looks like we took 3 trades. Yeah, see, now this right here is the perfect YBR trade. We have red on the YBR, you have a down close, you have bearish separation, and the cycle is red and going down. You know, there were follow-up trades to that. Like right here was one, right over here was one. But as far as the YBR trades itself go, those were the YBR trades in that first few minutes. Yeah, I'm sorry, I'm getting lost in my thought here. There was a long opportunity right here that would have been a break even. I wouldn't have done this one because there wasn't enough room between the green line and the cycle down here. Now, I did do some YBR trades in the room this morning, but I'm not counting them toward the total. Okay, like this is a YBR trade right here that you could have done. And we did do this one. We picked up 4 ticks on that one. And then we picked up 5 ticks on this one to put us, no, wait a minute. I didn't count this one. Oh, I think it's, yeah, it's because it was a YBR trade. We picked up, I think we picked up 10 ticks on that. There was a shorting opportunity here that I missed and here that I missed. And let me go back here. Our first trade, we made 4 ticks. Our second trade, no, our first trade, yeah, we made 4 ticks. Our second trade, we made 5. So this was probably our second trade. And at that point, you know, I was just looking at the YBR stuff and discussing it with people during live markets. Let's see. And it actually looks like we had one more right here, but we took a tick. And I didn't count that one. No, an otherwise nice YBR trade right here. Again, right here. And here. That was during the break. Okay. And that was gold this morning. Gold was pretty wild. And it will be when the FOMC comes out. So be very careful. Okay. On the euro, our first trade was right here. We picked up 1 tick. Second trade was over here. We picked up 12 ticks. And this last trade here, I did not account for. But it looks like he picked up a couple of ticks on that one. There's YBR trade right here on the short side. There's not so much to look at here with the euro because, well, it moved, but most of the time when it was going down, all of this right here, the reason I don't have anything highlighted is because it was going into the low of the day. Okay. In hindsight, it looks like there's a bunch of trades there, but in real time, it wasn't so much. Okay. Crude, let's see. We have, okay, on crude, this is a beautiful YBR trade right here. This is too. We missed that short off the BBC right there. We missed the trend line trade right there, but we did pick up 3 ticks on this one. We missed that one, picked up 4 ticks on that one to put us at +7. We missed that one. We picked up 2 ticks on that to put us at +9, and then 4 ticks on that to put us at +13. Now, the YBR trades were working pretty well today in crude too. If you know what you're looking for, and you know, when you wait for it, then there's just a lot of opportunity with those trades. Okay. And it's a really simple trade setup, and you only need one a day. Well, we just did crude. Sorry. Yes. Now the ES give me a break-even trade right here. When it was really moving, I was watching something else. But it looks like I had 3 trades on the ES. I gotta fix that in a spreadsheet. A break-even trade there, and we stopped out on this one. Now when it was really moving, I was watching other stuff. I was trying to trade the gold and all that. But here's YBR trade right here that worked out. YBR trade here that worked out. There was just a lot of opportunity today, and the opportunity is going to diminish here over the next hour and a half. And the closer we get to the FOMC, the less opportunity you're going to have. All right, so that was it. Now, again, if you want to become part of the CFRN family and we made it really affordable for you and simple, go to EminiFuturesTrading.com. EminiFuturesTrading.com. If you can read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today's 16th day of September, 2020. Today we made 13 ticks on the euro. We actually made more. Made 5 ticks in gold. We made 13 ticks there in crude. And we lost 8 ticks on the ES. So today we were at 161.25 per contract. I gotta bump this number 1 because we had another break-even trade that I didn't see. It took 25 minutes and 3 trades to get to the goal for the day. At that point, we're up $121 per contract. We took a total of 12 trades, and on the month now, we're up $7,225. That's over 11 trading days, averaging $656 per contract per 2-hour trading day. And as you just saw, I missed most of the trades. But we are now at our 147 consecutive green day, and on the year now, we're at $70,681. That's over 172 trading days, averaging $410 per contract per 2-hour trading day. Okay. Now, again, if you want to become part of the CFRN family, simply go to EminiFuturesTrading.com. EminiFuturesTrading.com. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, I see you are ready. Excellent. Good. Time's at 12:24.
Recap of the recap.
Today it took. Let me go and look. Where did I write it down? Hang on.
I'm sure you just said it. Everybody.
I put it straight in. Yeah, I put it straight in the spreadsheet. But today it took 25 minutes and 3 trades to get to 121.50 contract. 25, 3, 121.50. That is what we did.
Good job.
Thank you. All right.
Okay, so what Michael just did is he explained to you everything that happened this morning during the 2-hour live training room. That's what happens in there every day and has day after day, week after week, month after month for quite a number of years. All we're doing there, or I don't want to say all we're doing, but what we are doing is we're teaching you the methodology and the strategy that we have used for many years. Now, there's 2 sides to our coin. One side of the coin is where we actually give you alerts live in real time, so that as you're brand new, as you're a beginner, as you're starting to practice learning the strategy in the simulator and the demo account, you have actual living, breathing trade examples to work with. So It's not like you're looking at a historical chart. It's not a woulda, coulda, shoulda kind of thing. It's actual alerts in real time that you're able to trade from day one in the simulator without putting real money at risk. It's important that you learn the strategy before you start putting real money to work. Now, we have what's called a 24/20 blueprint designed to help you go from 1 to 20 contracts over a period of 24 months. Now, you're going to start in sim, like I just said. Your first goal when you come on board is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, then the blueprint will give you a green light to go live with one contract. Now that you're live trading one contract, your goal is to increase your account balance by $2,000. The reason for that is so that when the blueprint gives you the green light for contract number 2, you're underwriting that second contract with profit you earned in the market. And as you work your way up the ladder, 2 contracts, 3 contracts, 4 contracts more, each time the blueprint tells you it's now time to add another contract, you're adding it with profit you earned in the market. Okay? Now, you've probably blown up enough accounts in the past to last you a lifetime. Some of you have been at this 6 weeks, some of you 6 days. But I talk to people all the time who've been at it 6, 10 years, still trying to find consistent profitability, have tried everything under the sun, except just learning how markets work, just learning the truth about trading, just understanding what causes price to move in a specific direction. And as it's moving in that direction, what causes it to stop moving in that direction and reverse and head the other way. These are all the things that we teach you. So one side of our coin, we're giving you these alerts to trade in the simulator, live in real time. And then of course, once you go live, you'll still have the alerts to trade. But that really quickens the learning curve of you learning how to find these trade setups on your own. See, that's the real goal. That's what we're really after. Teaching you how to find these trade setups yourself. Not that we're going away. We'll still be here. But in the beginning, when you get an alert, it's an alert because you don't yet know what you're looking for. But as you see that alert and you trade that alert in the sim over and over and over, you slowly start to recognize what the chart looks like when a trade is setting up. You understand all the words you hear us say, like bullish cross and price pulled away and price pulled back, physically touched, then we had an up close, and then we got long. Okay, all of that starts to make sense because you see it happening over and over. You're actually trading it. So what might take you, years trading off historic charts or reading books or just watching videos, actually rolling up your sleeves, getting to work, taking off trades, making mistakes, and it's not a problem. There's no one looking over your shoulder, nobody judging you. I spoke with someone the other day, been around for 3 or 4 days, and the question was, well, should I start trying to put these trades on in the simulator? Absolutely, from day one. Okay, doesn't matter if you get it wrong, because you're going to stay in the simulator until you put together your 10 consecutive days in a row. Now, so far this week, here's what's happened with the Logic 247 alert service. We have 2 different types of alerts that we send you. The Logic alerts come around the clock, 24/7, as opportunity presents itself. The other alerts, the Concierge alerts, that's sort of a big picture look at the entire upcoming session. These are open shortly after the Globex open each evening, and those numbers are good for the entire session. And you will, on most days, see the alerts trigger multiple times. If we have a strong directional day, you might only see one trigger. But if it's a typical day, price will trigger and then come back to the trigger again. Some days we see just one, but many days we see 2, 3, 4, 5, 6, 7 triggers off one alert. And there are multiple alerts. And as Michael said earlier, you only need one. You just need one of those a day to start building your business. Our philosophy is not to teach you how to get more points, more points, more points. Our goal is to teach you to become a consistently profitable trader. That's our goal, so that you don't need more points, more points, more points. You just simply need to be consistent at taking a small slice out of the market each day, and then over time you increase the number of contracts that you're trading using profits you earned in the market. A 2-point move in the S&P, we know that's $100 if you're trading one contract. But a 2-point move in the S&P, the same 2-point move in the S&P, once you've earned the right to trade 10 contracts, well, that becomes a $1,000 trade. One of the most difficult things traders have to deal with is, once they understand that math, is the desire to just want to jump to the head of the line. Ooh-wee, look at that. Well, I'm not waiting around. I'm just going to roll up my sleeves, put on 10 contracts, and go click the mouse. That never ever ends well. And we've worked with thousands of traders over the years, and I promise you, it never works well. If you can pace yourself, if you can exercise patience, self-discipline, all the things that you need, you too can become a trader. But you need a teacher. 9 out of 10 new traders fail simply because they don't have a teacher. They're trying to piecemeal it together. Well, they pick up a little something here and a little something over there, and turns out those things don't even work together so well. And yeah. But if 9 out of 10 fail, then simple math says that 1 out of 10 must succeed, I guess. Go find 1 out of the 10 who actually succeeded and just ask them, hey, did you have a teacher when you started this? 9 times out of 10, they'll say, well, of course, how else would I learn? Different minds work different ways. Most minds look at trading and go, oh man, I'm going to make a killing at this. But there's another type of mind that looks at it and goes, this is the most incredible opportunity I have ever seen. I better hurry up and find somebody to teach me how to do this. Unfortunately, 9 out of 10 think the first way, and only 1 out of 10 thinks the second way. But that's okay. I was one of the 9 out of 10. Michael was a 9 out of 10. You can become a different person because you can learn to think differently. You can learn to approach the markets logically. No mystery, no secrets, no magic, just logic. Now, speaking of logic, so far this week, we are in week 111. Through 12 noon this afternoon, we've issued a total of 31 alerts, 7 never triggered, still waiting on the results of 5, 19 actionable alerts. 2 of them were stopped out. That means 11% of actionable alerts were stopped out. Now, that's not a typical number. What we average is 20% of actionable alerts being stopped out. If I scroll back up to week 110, which is right here, last week for the entire week, we issued 66 logic alerts. 15 never triggered, 51 were actionable, 9 were stopped out. 18% of actionable alerts were stopped out over the course of the entire week last week, week 110. And now, here's where we stand halfway through the week, week 111, 31 alerts, 19 actionable. 2 stopped out, 11%. That's logic, okay? Now those logic alerts, here's how they look to you when they're coming at you live in the channel in real time, okay? Again, that was last week, and if you scroll above this, of course, you'll see all the alerts from last week. And if you scroll down, this was Sunday night, 6 p.m. Eastern. That's when we go to work. Global markets, futures markets open Sunday night, 6 p.m. Eastern, and remain open until Friday afternoon at 5 p.m. Eastern. There's a 1-hour break each day from 5 p.m. to 6 p.m. Eastern. So right now we're in the Wednesday session. The Wednesday session will end at 5 p.m. Eastern today. At 6 p.m. Eastern tonight, that will begin the Thursday session. The markets will reopen and we'll be trading once again. So Sunday night, the very first alert that we issued this week was to buy the S&P at 33.45 to 33.47, first target. Final target was the weekly trading zone, 49/50, and the swing high on that particular move. And we only track the initial trigger. Most of these come back and trigger again, you know, and it may continue further. But at the time of the recap, the swing high was 33.49. Okay, so from 33.45 to 33.49. Okay, that's a 4-point move in the S&P. There's 4 ticks to a point. Each tick pays $12.50. So $12.50 times 4 is $50. So 1 point is worth $50. So this trade, from the entry to the target, a 4-point move at $50 a point, this paid $200 per contract traded. Now, as I was explaining earlier, if you're patient, do things the right way, the cautious way, the careful way, okay? By the time you earn the right to trade 10 contracts, this is no longer a $200 move, it becomes a $2,000 move. But you have to be patient, okay? Now, right after the S&P, we had a gap fill that never triggered. It's still unfilled below us. Here's the Dow. There's 2 more gap fills and 3 gap fills that they just never filled. It's very unusual. Index futures almost always close the gap in the same session, usually within a couple of hours. But here lately, these last couple weeks, as we've just been up near these all-time historic highs, we've seen days go by before the gaps fill. That's unusual. Then here's the NQ to be long, 1160 to 1170 to 1184. At the time we did the recap, we'd gone up to 1180. Okay, and so from 60 to 80, that's 20 points. At $20 a point, that's $400 per contract traded. This is a short on crude. This is a no trigger on gold, no trigger on silver. Then we had a long on the NQ. We had a long on the S&P. We had a long on the Dow. Stop out on the Russell. Long on crude. Long on gold. Long on silver. Stop out on the S&P. Long on the S&P. That was an accident, a duplicate. Here's long on the S&P. Here's short on gold. Short on silver. B is buy. Long on the Russell. NQ, long. S&P long. This is the ES. It was a hedge. It never triggered. And then we have ones that we're still waiting on the results of. Now, these pop up in this channel when opportunity presents itself. It could be at 2 a.m., it could be at 2 p.m. It's based entirely upon when opportunity presents itself. Now you might go, well, what good is it going to do me at 2 a.m. if I'm asleep? Well, when you wake up, it's going to be in the channel, and if it's triggered, there's actually a high probability that it's going to come back and trigger again. So you have working inventory. When it's time for you to sit down and trade, whatever hours you have carved out in the day for the purpose of trading, you go to the alert channel, you see what alerts are out there, what's triggered, where are the markets in relation to the alerts, and you've got fresh alerts dripping out the end of the pipe as you work through any previous alerts that may be getting ready to trigger again. Okay? Now, again, those pop up, your computer, your phone, your tablet makes that little telegram sound. And you shouldn't just trade it because it's an alert. You should go look at your chart. That's what that sound is. That sound is calling you to come look at your chart and make sure that current market structure actually lines up with the alert. I'll show you what I mean. Okay. Now the concierge alerts, those are a little different because they come out as a static report at the beginning of each session. Okay. Last night, I got them out at 6:30 p.m. Eastern. I try to get them out as quickly as I can, right after the Globex Open. Now, these numbers are good, again, for the entire session. So you go to your S&P chart, you draw a line at 3402, you draw a line at 3386. Everything in between is the market making up its mind what it wants to do next. Is it going higher? The buyer's in control? Or is it headed lower? Seller's in control. Now, it doesn't mean you can't trade between these two numbers. In fact, the logic alerts, because they pop up as opportunity presents itself, so as price takes off headed to 3402, there's a high probability that you'll get a logic alert that may walk you right up to the doorstep of the long side of the concierge trade alert. Okay, S&P, Dow, Russell, Crude, NQ, gold, silver. Okay, let's bring up a chart and let's take a look at some of these. Okay, let's see where we are on the daily S&P first. This is the last leg up on the daily chart. From the swing low on June 29th to the swing high on September 3rd, we almost reached a 50% Fibonacci retracement from the low to the high. Okay, we got below the BBC. This just stands for bull bear cross. When price is below the BBC, the green line, we anticipate lower prices. When price is above, we anticipate higher prices. Now that's true on every market. That's true on every time frame. Price always reverts to the mean. In our case, the mean happens to be green. So there's a retracement back to the BBC. Price always reverts to the mean. Another leg, a retracement, a leg, and a retracement, a leg, a retracement. Now you see the price ran into trouble here because overhead, after this pullback, we got red and falling. And so day after day after day, price tried to crush its way through, couldn't do it. It took red and falling, actually getting below the BBC, and buyers came in, they bid it up, got us on the north side of the BBC. What was red and falling, resistance, turned to blue and climbing, which is support, and then price just rode the back all the way up to the new all-time historic high. When price could go no higher, it goes looking for support. Okay, it pulled back to the BBC, caught a pretty nice bounce on that first touch of the BBC. The buyers were not as committed to their positions as sellers. They stepped back. Price dipped down to this 50% fib. Fibs are in the area, almost touched it. From support, we bounced back up to resistance, okay? And we actually got a bearish cross. Let me refresh this chart. Yeah. Okay. So price got back to the BBC. Got a bearish cross. But you see how it's starting to turn? Okay. Just like over here. See how red resistance becomes support? And support becomes resistance, right? We're in a position now, if price can trade back up to this 24% fib, or right along the highs of these candles right here, if price can print about 34.39, give or take, you're going to have blue and climbing below you, and that has a very good possibility of taking us back up to this swing high. First, we got to clear these highs right here at the 24. Okay. From the low to the high, that's the 24% Fibonacci retracement. This is the 38. This is the 50. Okay. As long as we stay on the north side of the BBC, we anticipate higher prices. When we get on the south side, we anticipate lower prices. Right now, we're just sort of in a consolidation with buyers and sellers duking it out. Who's more committed to their positions? Okay. If buyers take the ball upfield, we want to get above this congestion. Got a nice little window of opportunity that we could trade up here. And coming down, there's a little window here. You got to be careful at these lows. If we can take out these lows, if we get below this 50, then there's a nice window of opportunity between the 50 and the 62. Now, everything I'm explaining about price, how price functions around the indicators, around fibs, and as I'll show you in a minute, weekly trading zones, it's all the same. Everything we do is fluid across every market and every time frame. S&P, gold, crude, Dow, Russell, MQ, 1 minute, 5 minute, 4-tick range daily. Some folks will tell you, you gotta learn a different methodology, a different strategy. You need a different set of indicators to trade the different markets. We just don't see it that way. Again, we've worked very hard to make things as simple as we've made them. And I think you'll see it's pretty simple. If you let it be simple. Trading's not easy. It never has been. It never will be. But it can be simple. So let's go to a 30-minute chart. Of the S&P. Okay. There you go. S&P. Come on over. Wow. That's a challenge. All right. Now, all that, I could have just retyped it, I suppose. Okay, all right. Let's get through these. On the S&P last night, the alert was to be long. 3402. Okay, the alerts got out at 6:30 p.m., so that's 18:30. So that would be in the life of this candle right here. And so 3402 is going to be right about here. 3402. Okay. And the concierge came out right here. Okay, by 3402. Okay, so we had an initial trigger that only took us up to 3403.5. That's 1.5 points. Price then pulled back to the BBC. We had a bullish cross. See, price pulled away, price pulled back. We have an up close, and as we trigger 3402 here, we put in a swing high up at 34.1825. 34.1825. All right. So from 3402 to 34.18, that's 16 S&P points. At $50 a point, that's $800 per contract traded. $800 per contract traded. Getting out at a swing high or a swing low can be difficult because you don't know it's going to be a swing high or swing low until after the fact. We do have what's called an exit signal. Okay. Now, you'll notice on this climb that the step line's on the left side of blue and climbing. Then the step line crosses over blue and climbing. See how it's on the left side? It steps up and over, up and over, up, and then it goes over, over. So this red candle that closes below the step line after it crosses over, that's a price of 3407.75. 3407.75. So if you didn't get out at the swing high, which again is a very difficult thing to do, $3407.75. You could have gotten out at the exit signal, and that would have still given you 5 3/4 points. 5.75. That's from the published entry to the exit signal. Now, at $50 a point, even 5 points, that's $250 per contract traded. Obviously, once you've earned the right to trade 2 contracts, it's double that. Same 5 points, but because you're trading 2 contracts, it pays twice as much. And with 3, and with 4, and with 5. That's how that works. Okay? Now, important prices, important areas, almost always tested. So you get a 1.5 point move. Okay, then you get this bigger move from 02 to 18, what is it, 16 points. You get back below the trigger again, right? Now, here's the dilemma on this one. You've got your trigger, things are going beautiful, but see over here you were above the BBC when it triggers. And when we're above the BBC, we anticipate higher prices. But here at the trigger, we were below the BBC. And we had red and falling overhead. So This is why I say never trade an alert just because it's an alert. Go look at the chart. This one you would very much want to trade. All systems go. But here, you're driving right into a brick wall. Now, granted, this one did stretch pretty well. I mean, it put in a swing high up at 34.12.5. Had you taken it, it would have been a profitable trade. But I'm just trying to help you understand the methodology and the strategy. When you go long on an alert, you want to be above the BBC and you want the supported blue and climbing. Here, we're below the BBC and we have red and falling overhead. So that's a big no on that one. And that is the Concierge Trade Alert for Tuesday night for the S&P. Here's the Dow. And the Dow has got a whole lot of sideways going on. Last night's alert was to be long, 28,180. Which is way up here. And below 27855. And we had that one candle that just dribbled over the line, put in a swing low at 28.46. So we're talking about 45 bucks. Okay. Talking about a stop out. That's really what that amounts to. Okay. So the Russell. Let's get that one up. Here we go. All right. On the Russell. Long 1545. So long 1545. Let's try that again. By 1545. Okay. You get initial trigger. It takes you up to 47. That's 2 points. $50 a point. So there's $100 per contract traded. Looks like once, twice, maybe even 3 times. But then you get below the trigger again, here, real good. You pull back to the BBC, which you expect to be good support. When price pulls down to that BBC, you expect it to be good support until proven otherwise. So from 1545, we traveled up to 1561. So 61 minus 45 is 16 at $50 a point, $800 per contract traded. Okay. One contract. What if you're trading 2 or 3 or 4 or 5? That day will come. But you first have to learn the strategy. You have to learn the methodology. You have to learn the mechanics of the system. You have to learn to put on and take off the trades. You have to be able to manage your risk. Okay, we're very big on aggressive risk management. But when you've earned the right to trade 2 contracts, then that number doubles. Okay, when you've earned the right to trade 5 contracts, that's times 5. That's one move. You don't need too many of these moves a day, like maybe 1, as Michael said. One of those moves a day can help you build a profitable trading business. Okay, it doesn't have to be this endless game of blowing up account after account after account, you know. Stop the madness, as Mr. Wonderful says. Do something different. And by do something different, I don't mean change your swing every time you step up to the plate. What I mean is learn how markets work. Learn to know where price is going to most likely consolidate. And once it puts in a leg and a retracement, every one of our traders knew with certainty after this pullback and this up close, they knew the next high probability move was to the upside. And since this trigger, we don't have an exit signal yet, because the step line, as you can see, is still on the left side of blue and climbing. Okay. All right. Just go to the NQ. Okay, we got a little different picture on the NQ. Last night's alert for the NQ to be long was 11,490. So on the first approach, we put in a high at 96.5, so that's about $120 per contract traded. Just like you saw on all the other indices, then pulled back to the VBC, where we found good support. Up we go, trigger again, and from 490 up to 507, which on one of the alerts last night was potential resistance. From 490, 17 points. That's $340 per contract traded. But we didn't stop there, and that's not a this week zone. 11,480 is the this week zone. 11,480. Yeah, 11,480. The next actual zone overhead is way up at 12,226. Now the swing high of this move, well, now this wasn't an exit signal either, because the step line was on the wrong side of blue and climbing. Okay. However, you could have used it as a point of exit. The swing high on the thing was 539. So from 539 minus 490, that's 49 points. $20 a point. It's $980 per contract traded, but again, getting out of the swing high or swing low, pretty tough to do. Okay, it typically happens only one way, and that's by accident, or you just got lucky. Question, what about the first time we hit 3402? Are you talking about on the S&P? Tell me what you're talking about. Sounds like the S&P number. First time we hit 3402, it ran up to 3403 and a half. So 1.5 points. Is that your question? That's what happened the first time. I'm assuming that's your question. If not, re-ask the question, and you re-ask and I'll re-answer if that's not the answer. Okay. So on the NQ short side, yes, we are getting out there. Well, I mean, you could have gotten out there, Ray, or you could have stayed in the trade. Either way, that's whatever decision you want to make. Now, on the NQ, the flip side was 11,342, which we barely touched down here. 11,342. swing low here is 36 and a quarter. So we're talking about 5 points, about $100 per contract. Again, this is some pretty quiet, listless, sideways trade as we head into this Fed announcement. Okay, Ray, your question, how long do we stay in? Well, you stay in until you hit the target. You stay in until you get the exit signal. Or you stay in until you're ready to get out. There's no, when you say how long do we stay in, there is no specific amount of time. Every trade is different and unique. I don't know if you're looking for an answer like you stay in 2 minutes or you stay in 5 minutes, or I'm not sure I follow you. On an alert, we don't want to risk more than, okay, how many dollars? Okay, are you talking about the profit side or the risk side? On the alerts, we don't risk more than $300 per contract per trade. Less when possible. I teach all of our traders a 3-step methodology using market structure to determine where your stop loss needs to be. If you've not had that mentoring session with me, then you should book it. That's the maximum. If it costs more than $300 to find out if our narrative is valid, if what we foresee as being the next high probability move, if it takes more than $300 per contract per trade to find that answer, then we don't want to participate in that. We want to wait for the next trigger, because as you've seen, we trigger multiple times. Quite often the second, the third, the fourth, the fifth trigger will offer you a better opportunity, one with less risk and greater profit potential, but no more than $300 per contract per trade. Okay? All right. Gold sleeping sideways here at the weekly zone. 73.74, that is this week zone. The highest weekly zone this week is 2001/2002. Price could take out this little double top here, and we've got a nice little area to be long up here. But right now is not a good time to enter gold, at least not long. Short, there is a window of opportunity. $19.70, down to 68. That's a $200 per contract trade. See, is there a weekly zone in there? Next zone down is 61.62. Yeah, so that's actually, it's an attractive alert. Let's make it alert number 5211. Hedge. GG. CZ. 20. So, we want to get below all these swing lows right here. Sell 1970. Initial target 1969. Potential support 1967. And then potential support at 65. And then we got a weekly trading zone at 1961/19. So I'm putting that in the alert channel right now. Okay, and so what we just did, what we just put together right there, this is what it looks like when it hits the channel. Because there's already a long, I think, overhead on gold. That's why it says hedge. We want to trade whichever opportunity presents itself first. So from 1970 to the initial target, 69. Next target, 67. Next target, 65. And then the weekly trading zone is always the final trade to target. On a short, it's the weekly zone below. On a long, it's the weekly zone above. So let me adjust this and put it up. This week's zone is 61, 62. There we go. Yeah. In fact, interestingly enough, we had this 63, 62 to 61. We had that yesterday during the show. And that worked out well as well. Okay. All right. So the alert last night for gold, go back to the concierge. Here we go. On gold, the alert was to be long 1984. Price walked right up to the door and fled in the other direction. 1984. The swing high was 1983.80. 1983.80, so the long side never triggered. 2 ticks away. 2 ticks. Okay, so no trigger. And the short side for gold, 1949. Obviously, that never triggered. And the last one on silver. Last night's alert on silver was to be long 27.67. $27.67. All right. 67. We put in a swing high at 70. So that's a 3 penny move. $150 per contract traded. Okay. All right. So that covers the S&P, the Dow, the Russell, the NQ, crude, gold, silver. That is, as they say, the whole shebang. And here we sit back at the S&P, right below the trigger. Okay, now if this thing consolidates and goes sideways for a little bit, or we trade just a little bit lower, we got a weekly zone right below us, 33.93/33.94. Yep. So as you can see, as price was coming down, see the consolidation we had here at the weekly zone? One of 3 things always happens at a zone: consolidation, rejection, or what we call the slice. That's when price slices through a zone like it's not even there. If price doesn't come back down to touch the zone, if it does come down to touch the zone, it's going to bring red and falling down. The BBC is going to come down, and that would give us an opportunity to trigger here again with the right market structure. The right market structure being we need price to be above the BBC. Now, let's say we don't go all the way down. Let's say buyers come in and start to bid it up right here. Okay, as price starts to rise, then, just as your red and falling became blue and climbing over here, you're going to see the same thing right here. Okay? And then, there you go. There you go. And there you go. Okay. Good word for the day. Keep John in your prayers. He's still under the weather. And we've been talking the last couple days about finding your place in the body of Christ. So today let's talk about realistic expectations. Realistic expectations are very important in life, in marriage, relationships, employment, and yes, in trading. Sometimes I talk to a relatively new trader. So what kind of goal do you have for yourself? Well, you know, I've been watching these markets a while. I think I'm going to go for like 20 points a day on the S&P. Okay. And there's certainly days when the S&P can give you 20 points in one move, in one candle, with the volatility we've had of late. But anyone who's been around trading for any length of time knows that having a daily goal of 20 points in the S&P, well, that's just not realistic. Now, if you traded one contract, and if you were to get those 20 points, that'd be $1,000. But again, it's not every day you can take 20 points out of the S&P, but you can almost always take 2 points out. So if you take 2 points and you've earned the right to trade 10 contracts, there's the same $1,000. So wanting to make $1,000 a day in the market is very realistic. But I just gave you two approaches, one which is a realistic approach and one which is an unrealistic approach. There's a very high probability that you can take 2 points out of the market any given day. It's not a high probability that you're going to take 20 points out of the market on any given day. I mean, is it more difficult to lift a 2-pound stone or a 20-pound stone? You see what I'm saying? So the idea is having realistic expectations. If I want to make $1,000 a day in the market, how do I do that in a realistic manner? Okay. Well, I just gave you the example. Now, in the book of James 3:2, it says, we all stumble in many things. Yes, we do. Some of us have kneecaps that are permanently bruised. I'm always hearing about people having to get their knee replaced and stuff. Is that because they stumbled so much? That could be my fate. Striving to do better is a good thing. But always try to have realistic expectations. Don't set yourself up for failure. Everything in life isn't black or white. There are gray areas and some in-betweens. Everything can't be perfect all the time, and everything isn't horrible all the time. Deciding to skip a meeting or social event because you're running 5 minutes late, or have a blemish on your face, or canceling an entire trip because a flight is delayed, or feeling like a terrible human being over one innocent mistake is sometimes referred to as polarizing. This leads to frustration and negativity. To maintain your joy in life, you must accept that you won't be perfect all the time, and neither will the people or things around you. When you expect perfection from life, you tend to expect the same from other people. And that kind of unrealistic thinking not only meets with a great deal of disappointment when your expectations aren't met, it puts unbearable pressure on the people you care about and can eventually destroy those relationships. In trading, unrealistic expectations can destroy your trading career before it even gets started. Because you're trying to do coming out of the gate what even the best of the best aren't capable of doing, people who've been at it for many, many years. And that comes from innocence, because you don't have any kind of a benchmark. You don't really know what's realistic and what's not. That's the job of the teachers, to help you understand what is realistic, what isn't. In spiritual things, you should have your pastor or someone that you go to. If you're married, I don't know, maybe you got a marriage counselor. But you should always have someone in every area of your life who's a little more mature than you are, who knows a little more than you do, and who is willing, without fear, to speak truth into your life. Why not give people a break and stop demanding something from them that they have no ability to give you? That's what we do, even with the market, with people, with our spouse, with employees, employers, you name it. Sometimes our unrealistic expectations aren't just for ourselves, but we place unrealistic expectations on others. That's going to put a real crimp in that relationship. Now, the Apostle James said we all stumble, fall, and offend in many things. So if we all make mistakes, and we do, learn to accept that it's just part of the human experience. And relax. Here's a question. In what specific ways do you need to be more accepting of the imperfect areas in your own life, or in the way someone else's imperfected areas affect you? But before you answer that question, think about this. 1 Corinthians 13:4. Love is patient. Love is kind. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.